8.2, preparing a post-closing trial balance. So you have one objective here, and that's simply to prepare a post-closing trial balance. So what they're showing us here is all of our general ledger accounts after our closing entries are posted. Notice here we have our assets, liabilities, owner's equity, and then everything from drawing on should be closed. And so they're showing us here. Now, if we were doing paper pencil copy of our general ledger, we would draw lines through it. But notice in like 8.1 when we were doing our closing entries, we actually put zeros on both sides. Means the same thing. Okay, so all of those accounts are closed. Those are temporary accounts. A post-closing trial balance is a trial balance that's prepared after the closing entries are posted. So here's an example of our post-closing trial balance. Again, any financial statement that we have, we're always going to start with a heading that answers who, what, and when. Now, what we're going to do on our post-closing trial balance is we're going to list all of our accounts that have balances. So any account that is closed, we're not going to list, only those accounts that have balances. If you notice, these are all of our permanent accounts, which would be our assets, liabilities, and our owner's equity account. We need to make sure that we list their debit or credit balances. We're then going to single line rule, meaning that we're going to total those two columns. And we're going to add up our debits and add up our credits and make sure that those two are equal. Once they are equal, we are going to do our double line rule. Now we do have to put in that heading as well for that as totals. An accounting cycle is the series of accounting activities included in recording financial information for a fiscal period. So here they're giving us a visual of our accounting cycle for a service business. You will need to know these steps. So make sure that you are paying attention to this. You will need to know this for the test. So our first step is that we are going to analyze transactions. So this little picture here is looking at source documents. It's supposed to be an example of source documents. So analyzing those transactions, we're going to look at all of our source documents and figure out what happened with the accounting in the business. Step number 2, we're then going to take those transactions and we're going to journalize them into a journal. Step number 3, after we've journalized transactions, we are then going to post those transactions from the journal into our general ledger. Step number 4, we're then going to prepare a worksheet. Step number 5, we're then going to journalize and post adjusting entries. So remember on our worksheet, we did have those 2 columns of our adjusting entries. So we're kind of working on that in our worksheet as well. Once we're done with that worksheet, then we journalize those adjusting entries and we're going to post them into our general ledger. Step number 6 then is where we're going to prepare financial statements. And so here they show us our 2 main financial statements are going to be our income statement and our balance sheet. Step number 7 then we're going to journalize and post closing entries. So put them in our journal, and then we post those journal entries into our general ledger. And then our last step is we are going to prepare our post-closing trial balance, which we just saw. Okay, that would be the end of the accounting cycle then, and then all we do is we start all over again. We're analyzing transactions or source documents, journalizing, posting, and all the way through. So it's just this never-ending circle. Number 1, why are lines drawn in both the balance debit and balance credit columns when an account has a 0 balance? This assures that the balance has not been forgotten. It's just showing that we have a complete 0 balance. So, like I said, paper pencil wise, we would draw a line through those balances. However, on the computer, when we're doing it, we're just going to make sure that we put a 0 on the debit balance and a 0 on the credit balance side. Number 2, which accounts go on the post-closing trial balance? This is going to be any account in our general ledger that has a balance. So that ends up being our permanent accounts. Those accounts that have been closed are temporary accounts. Those accounts are not included on our post-closing trial balance. Number 3, why are temporary accounts omitted from a post-closing trial balance? That is because they are closed and have a zero balance, so we do not list them. Number 4, what are the steps in the accounting cycle? Remember, you will need to know this for the test as well. So those are your 8 steps. You'll need to know them in order. First, we analyze transactions. Then we journalize them. Then we post. Then we prepare a worksheet. Then we're going to journalize and post adjusting entries. Then we're going to prepare financial statements. Then we're going to journalize and post closing entries. And then our last thing is preparing a post-closing trial balance. That was the end of 8.2. You can now go to the 8.2 work together.